people joining us from London. It's pretty early in the morning, 8:30. I know from friends and family in the UK and clients, everyone's pretty much still in lockdown. And after an amazing May, which I think was one of the warmest Mays on record, I think the rain's coming to the UK today. So welcome everyone from London, and welcome everyone joining also from Israel, where obviously the weather is a lot warmer and a lot sunnier, and we're much less in lockdown than people are in the UK. So this morning's presentation, I'm joined by my colleague Mike Ellis, who is Chief Investment Officer at Pioneer Wealth Management here in Israel. And the topic we're going to be discussing is based on our combined decades of experience advising clients in the UK and in Israel. What are the common mistakes that people make with their finances when they make Aliyah? And if you've made them, how can you fix them? And if you're in the UK contemplating Aliyah, you've got the opportunity to avoid them at outset by not making them in the first place. And hopefully over the course of the next 45 minutes, we're going to overview some of the major mistakes that people have made and try and explain how to avoid them or how to solve them if you've made them already. By way...
Sorry, we have a request here that they can't hear. Yardena, can you just check everything's okay? Okay.
Everything is okay.
Sound is resonating.
Everything
Okay.
is
Nothing we can do about that now. Turn the volume down again. Yeah.
Mike, can you hear me?
Okay, we've just adjusted the microphone settings, so hopefully it's a little clearer.
Okay. Okay, all right. It seems some people have got some sound problems, but I think others are okay. So we're just going to continue.
Ask them to raise their hand if they can't hear.
If you have a sound problem, can you raise your hand? We're getting some raised hands here, so you can have a look.
כן, אני לא יודעת מה לעשות שם. אתם מחוברים? לסאונד?
Yeah.
Let me check them.
Sorry, we're just having some logistical things. We've got 6 people who are raising their hands. Well, we've got quite a few sound problems here. I hope that's just the echo, and I think that you can hear us somewhat. We did. I think apologies for that, but I'm not sure what we can do at this stage. You could. I'm going to write in the chat now.
We're going to write in the chat a couple of dial-in numbers. So if you're having a lot of echo on the computer, you can turn your computer sound off and you can dial in. If you're in the UK, you can call 0203 481 5240 and put in the password, which you've already been sent in your joining instructions. It's 0203 481 5240. Put in the password, and then you can listen on your phone and watch the video on the screen. If you're calling from Israel, you can dial 03 978 6688. And that's the way of joining the webinar if you've got problems on your computer sound.
The password for that is the same.
Okay.
Hope that works. All right, we're going to continue now.
We're going to continue. So, as I said a few moments ago, the seminar is going to cover mistakes that Olim make, how to fix them if you've already made Aliyah, if you've not yet made Aliyah, obviously how to avoid them. And it's based on our experience of advising clients both in the UK and in Israel. A couple of bits of background on myself. I've got 27 years experience of advising clients on their financial planning, both at St James's Place in the UK and at Pioneer in Israel. There is no other source of financial advice available to individuals in the UK or Israel from someone who is licensed in both Britain and Israel, working for large organisations in both countries. This morning's presentation won't really cover specific UK financial planning issues. So if you're thinking of making Aliyah, you're concerned what to do with a company pension, be it final salary or money purchase, if you have a SIP or personal pension, ISAs, inheritance tax planning, trust planning, all those kinds of UK financial planning issues. We'll talk a little bit at the end about how you can perhaps start to address those now in advance of your Aliyah plans. What we're going to focus on is the issues that we said we were going to cover in the presentation. And we'll kick off with the first problem that many individuals have made. And that is they've made Aliyah and they've continued to hold far too much money in cash. And obviously, in days gone by, when interest rates were at a reasonable level, cash did provide a return, although historically it's certainly true that after tax, cash has failed to keep pace with inflation and rising prices, and people holding too much money in cash for far too long have seen the deterioration or erosion in the value of their capital. The big change, of course, in the last 10 years has been the precipitous decline in interest rates in the UK and around the world. And as we can see from the recent cut in the base rate by the Bank of England, sterling base rate is now 0.1%, but it's been sub 1% for over a decade. And the outlook over the next 10 years is for interest rates to remain pretty much as low as they are today. So the current yield on 10-year gilts, government gilts in the UK, is 0.22%. So the problem facing many investors is they're holding a lot of cash, more than they need for an emergency reserve and to meet upcoming expenditure. That creates a dilemma, and that's problem number one that people need to think about addressing.
We see too much cash in many accounts from immigrants from around the world. And from my point of view, cash is not a long-term solution. If you can sit in cash whilst you make Aliyah, whilst you settle down and plan a property purchase in Israel or something like that, but it is not a long-term asset class, especially now with such low rates. And one can beat cash net of fees and taxes without taking too much risk. One can build a conservative bond portfolio and with a modest but sensible targeted return, and without taking excessive risk. What often happens in my experience is a new immigrant comes to Israel. Both Andy and myself, we've been through this. We're both new immigrants. We know what it feels like to feel a little bit insecure about the change, and then you keep your money in some sort of safety net. And it's fine for the first year, but it's not a long-term solution. So we really think that without taking excessive risk, without risking your capital, one can certainly beat cash alternatives offered by banks.
Okay, thanks, Mike. So problem number one then is to just not leave too much money earning you zero over the medium to longer term. Second challenge facing many investors is they've grown up in the UK, they're familiar with sterling, it's a currency they know, and they then make the mistake of coming to Israel and retaining far too much exposure to sterling assets and sterling income. Now, one of the most basic principles of financial planning is the absolute imperative of matching assets and income with liability and expenditure. And if you've got assets and income in sterling, and you're living in Israel where your liabilities and your expenditure are in Shekel, you've got a very, very clear mismatch. And that can create real problems if the currency you're holding your assets in is a weak one. And the problem, as any Olim from the UK knows, is that sterling has been on a one-way downward slope against major currencies for a considerable period of time. So the first slide shows the sterling dollar exchange rate, which back in the 1980s was almost 2.4, 2.5 to the pound, and has been through periods of ups and downs to the point where it is now today, where the pound is trading at $1.24. So almost a halving of the exchange rate over the last 35, 40 years. People living in Israel or anyone who comes to Israel on holiday from the UK knows the situation has been the decline has been far quicker against the shekel, which has been a very strong currency for the last decade. When we made Aliyah back in 2007, a pound bought me 8.6 shekel. Now it's buying me 4.3, a 50% decline. So if you come from the UK, or you're making Aliyah from the UK, and you have fixed income in sterling, for instance, pension income, then the last thing you need is to have your assets and your other investment income fixed in sterling as well, because that means you're totally exposed to shekel strength or potential sterling weakness. And I would give the analogy that the last thing you do with your life savings is walk into a casino, go up to the roulette table, and put all of your life savings on black, because if red comes up, you've lost everything. So for most investors, they need to diversify significantly away from sterling because they've already got sterling assets and income. They need to make sure their standard of living is protected in shekel terms to give them peace of mind in Israel.
So the solution offered there is obviously take a holistic view on the wealth, and as Andy said, separate your pension and other assets, and quite simply don't put too many eggs in one basket as a fundamental for financial planning. So that would include non-sterling denominated solutions and including shekel. So we see a lot of Olim want to remain in the 10-year tax-free period, but they take on the currency risk. So you have to have a sensible, holistic view and weigh the trade-off between staying in a foreign currency tax-free or being in shekels taxable. But at least you can eliminate, if you do choose a shekel strategy, you can eliminate the currency risk and you can get rid of at least that variable in your financial planning. So obviously a shekel portfolio with a shekel long-term target doesn't have the currency volatility and currency destruction that we've seen many of the immigrants over the last 10 years have suffered.
So with exposure to shekel, you can wake up every morning and not have to worry about the exchange rate, which is considerable peace of mind for many people. For those who've grown up in the UK and had their working lives in the UK, people often build up portfolios of buy-to-let properties, apartments and flats as a source of income in retirement and a source of financial security in retirement. Whilst the coronavirus has shown most recently in a new way with rental voids that property is not as safe as houses, the bigger problem is from the perspective of people making Aliyah, moving to Israel, who are now in Israel, using a portfolio of UK rental properties as a source of long-term security, financial security, can be a huge and costly mistake. So firstly, on the one hand, as an asset itself, as we all know, property is illiquid. As we've seen, especially recently, there are voids of income. The additional uniqueness of the unique drawback once we move to Israel is your geographical detachment from the properties that you own. When you're living in the UK, you can visit the properties, you can check them, you can inspect them. Once you're in Israel, that becomes far more difficult. And we found, especially for clients who get older and further into retirement, it becomes a real millstone around their necks. The managing agent that they knew 20 years ago in the UK is no longer there, he's retired and moved on. They're struggling to find someone to look after the properties for them they can trust. They can't go and see the properties themselves because they're not up to traveling so much, even without the coronavirus closure. People find in later retirement that property in another country can be a massive, massive millstone around their necks. The second problem with investing in property and then making Aliyah or being in Israel is you're going to pay far, far, far more tax than you really should be. And that tax can be manifested in three ways. Firstly, if you're owning property in the UK, you're subject to UK tax on your rental income. But for 10 years after making Aliyah, you could be exempt from paying tax in Israel on your worldwide assets if you structure them properly. So you're paying voluntarily income tax on a sum of capital that actually could be generating tax-free income for a decade. Secondly, you can still leave yourself liable to capital gains tax. And thirdly, and very significantly, UK property will be subject to inheritance tax even if you move permanently to Israel and become UK non-domiciled, because they remain UK situs assets. So in one fell swoop, voluntarily, 40% of your assets will be going to the Inland Revenue instead of being an inheritance for your family in the future. So real drawbacks with holding property as a long-term investment when you make Aliyah from the UK.
Again, taking a holistic view, we see property as an important asset in someone's financial plan, but ideally you have to avoid these tax landmines because they completely negate any long-term returns that you might be squeezing out of a good asset. So property is part of the solution, but it mustn't be too big a solution. You need to mix in that property, global property from other locations, avoid the estate tax exposure, and mix liquid and illiquid and self-managed and professionally managed property.
Thanks, Mike. Anyone who lives in Israel or comes here on holiday knows Israel is a very expensive place to be. But one place or one example of where Israel actually costs a lot less than being in the UK is when it comes to fees and charges incurred by investors on their investment portfolios and the advice that they receive. As an advisor in the UK with 27 years experience, I know exactly how much most asset managers are charging, and I can tell you that the fees that are charged in Israel are significantly lower. That's a real reason to be thinking about what's the total net return that I'm going to be receiving at the end of it all.
Okay, so the Israeli market, we've all had the experience of negotiating with Israelis, and we all know that it's a much more fee-sensitive market. So what happens here in Israel is you don't pay initial fees typically for advice or for setup of a portfolio. You don't have exit fees when you invest in a fund, and you typically don't need a wrapper, so you don't have wrapper fees. In addition, the way Pioneer works, we're completely independent. We don't have any house products. We don't receive any rebates or kickbacks or commissions. It's only the direct fee paid by the client. So if there is, it gets rebated, but we typically avoid it. We also use a lot more, when I compare our solutions to UK portfolios that I've seen, we typically have a lot more passive solutions, which again have their place in a portfolio, not the entire portfolio, but part of the portfolio needs to be passive, and the total overall cost is coming in typically half of what we see in the UK. So lower taxes, lower fees mean more returns for the client over time.
Great, thanks, Mike. You know, it often amazes me as a financial advisor, knowing that financial advisory relationship with a client is a lifelong relationship. How many people make Aliyah, take advice in the UK before they make Aliyah, and then arrive in Israel and find the advisor is marooned behind them? They're not there to see them, they're not there to give them advice, they're not there to give them support and help exactly when they need it. With investors' money, when they make Aliyah, they can make almost the same problem by using very expensive offshore wrappers and offshore platforms, often in the Isle of Man or the Channel Islands, as a place to hold their money. Now, over a decade ago, before the 10-year tax exemption was brought in, there was some argument or merit in having these kinds of expensive products, in spite of their inflexibility and charges. But with the advent of the 10-year exemption on non-Israeli assets for Olim, the reasoning behind these products has disappeared. We meet many people now in Israel who put their money into these offshore wrappers in tax havens, and they then find that when they want to bring the money into Israel, it can be a really cumbersome and complex and time-consuming process, because the Israeli banks are rightly very up to speed and very diligent on money laundering, very strict to make sure that money is legal. And if you're bringing money from an offshore tax haven, you're asking for trouble. You don't even need to put it in that tax haven, in that offshore wrapper in the first place.
So some experience with the Israeli banks here is key. Those of you on the call who've tried to bring money in will identify with the phrase that Israeli banking system will test your Zionism to its maximum. So we work with all the Israeli banks. We manage money on all the Israeli banks. We get preferential fees for our clients, and that's lower fees, less taxes, more returns.
Thanks, Mark. Another problem I've certainly noticed with British Olim is, again, their experience, their comfort level and their knowledge of the UK markets means they're often very exposed if they're self-managing their own portfolios with UK investments. But the problem is also true of many UK advisors, UK discretionary managers and private banks. They have a significant weighting in their portfolios for UK assets. And if you're living in the UK, that's a good thing because of, again, the matching of assets with liabilities. But once you've moved outside of the UK, it's really very important to take far more of a global perspective with your portfolio and with your assets. It's certainly true to say that over a considerable period of time, UK assets and investments have underperformed many key global markets. And this slide shows that over the last 15 years, investments in the main US index have provided double the return of the UK market. Now, sometimes if you're holding investments that are denominated in sterling, the investment performance can be flattered by the weakness of sterling against, for instance, the dollar, which makes your returns seem better than they are. We're talking here specifically about dollar returns, where you don't have that masking of actual performance. Most of the world's best companies are just simply not listed in the UK market. And much of the UK market is dominated by old economy industries. You've got a lot of natural resource and mining stocks. You've got banks and insurers. You've got airlines and hotel groups, which of course have been very hard hit by coronavirus. Most of the major growth companies in the world, most of the major super brands in the consumer space in the world are not British businesses and they're not listed in the UK. And perhaps the best example of that is the fact that in the FTSE 100, there is 0% of technology social media businesses, but they make up a large part of the global economy. You've got the likes of Microsoft, Amazon, Google, Facebook. These are huge businesses generating billions of dollars of profit a year. UK investors get no exposure to global markets in the way you can have if you have a purely and truly global portfolio.
Not much to add to that. It's amazing to me to see how UK-centric UK investors are and how little global exposure they have. I've seen it time and time again, and it's always surprising to me. So the solution there would be to be as holistic as possible on a global basis. And of course, if you take a very strategic view, you want to include in your portfolio Asian or Chinese elements, and it's very difficult to do that within the constraints of Iraq.
One of the advantages of making Aliyah, and of course, hopefully no one ever makes Aliyah purely for the tax benefits, but there are considerable tax advantages of living in Israel. For the first 10 years after making Aliyah, you pay no income tax or capital gains tax on non-Israeli assets. It's a chance to make considerably higher returns simply by virtue of paying no tax. Yet it constantly amazes me how many people don't take the right advice and end up in a situation where they're paying tax unnecessarily, tax they could very legally avoid doing with careful planning. One example will be UK income tax, and I've already alluded to that specifically with rental income on UK properties. 10 years of income tax bills that could be very easily sidestepped with some careful planning. Some people hold products such as UK investment bonds and unit trusts on which income tax is deducted at source and is non-reclaimable, even if the investor is no longer a UK taxpayer. Capital gains tax as well, and as I've also said a few minutes ago when we were talking about property, the problem of paying UK inheritance tax. Because of course, one of the advantages of being in Israel is there is no estate duty, there is no inheritance tax. From a perspective of US assets, there's also two things to think about. I'm always reminded of a client I met who made Aliyah, moved to Israel, moved his portfolio out of the UK, and was very proud of himself for the fact that he'd constructed a portfolio of American shares and funds listed in New York as a way of avoiding inheritance tax, which he'd done from a UK perspective. But what he didn't realize was that he had effectively swapped a UK inheritance tax liability for a US estate tax liability. There are many people out there that we meet who've got portfolios of American property or assets or share portfolios. If they're not a US citizen, they're going to be paying a very large amount of estate tax voluntarily to the US tax authorities. Careful tax planning is important. We work with some leading accountants, such as Mark Stroll, who I know some of you on this call know, who can advise both on the UK aspects of tax planning and on the Israeli aspects of your tax planning. But there really is no need to pay tax voluntarily if you don't have to, and it amazes me how many people do.
Very simply, one needs to avoid the taxes. The most draconian tax is the US estate tax, and there are some interesting ways to avoid that. If you put the assets in an entity, that's one way. Another way is to buy Dublin registered products which give you US exposure, and that way you can actually get a lower dividend tax because of the Ireland-USA double tax agreement, and we get the exposure to the US companies that we want in a portfolio. So we get the best of both worlds, we avoid the downside, and we enjoy the upside.
Great. And the final mistake we wanted to talk about this morning is the problem of either not taking advice or taking advice from someone who can't be with you for every stage of the journey. Again, many people feel comfortable making their own investment and financial planning decisions when they're living in the UK, perhaps with some input on tax aspects from their accountant. But I think it's very dangerous to continue that approach when you come to Israel. You're living in a different country, a different market with different rules. The whole investment landscape needs to be different because of some of the issues that we've covered this morning, primarily taxation issues. We need to diversify assets outside of the UK comfort zone, and the key issue of exchange rate risk and the impact of remaining in sterling over the longer term. But then I mean people who've taken some sort of advice before they left the UK, but what that advice never can be is holistic, end-to-end advice with you for every stage of the process. Because to take advice from a UK advisor who isn't licensed in Israel really has two implications. The first is on a personal face-to-face contact level, your advisor just might not be available when you need to see them. And the last few months with the travel ban for non-Israeli passport holders has left some people here without access to an advisor who's stuck in the UK and can't come and see them. But perhaps more importantly, you need to take advice from someone who is licensed, regulated, and insured in Israel once you're living in Israel. There are some salesmen who run around Israel trying to sell products to clients, but they don't have a license. And that can be a very dangerous stick. It's something that doesn't exist in the UK, where all advice has to come from a qualified and regulated advisor. But it's very, very important when you're taking financial advice in Israel to have your source of advice being someone who is here on the ground, who can come and see you and your loved ones when it's needed, someone who has access to Israeli banks, has access to Shekel investments, has knowledge of Israeli tax and Israeli law. These are all things that you can't get if you take advice from a UK advisor who doesn't have Israel as part of the proposition, doesn't have qualification and license in Israel, and also isn't insured in Israel. So if something goes wrong with advice, as a customer or as a client, you have no comeback. You can't get any kind of compensation for poor advice if the advisor you're dealing with is not based in Israel. And the solution is quite clearly to deal with a firm of advisors that are here, who are providing face-to-face advice, tailored solutions to meet your own personal financial circumstances, who can come and see you when you need it, have the relationships here with the banks and the accountants, have dollar and shekel solutions available for you, are regulated by the Israeli Securities Authority to give that peace of mind that you know that everything is being done is above board and proper. But also the experience of UK finances, UK products and structures to help advise you on your pensions, on your ISAs, on your trusts, on your inheritance tax requirements outside of the UK. A proper whole of life end-to-end process of getting financial planning advice. Ultimately, someone sent in a question, what 5 shares would you recommend buying today? You know, that kind of stock picking, market trading, short-term approach looking for a quick buck, that's really not what financial planning is about. Financial planning is about achieving peace of mind by being prudent and careful and making informed and intelligent decisions with your finances. Things like keeping fees down, keeping tax to a minimum, matching assets with liabilities, matching income with expenditure. That's the basis on which you can build a long-term and successful Aliyah. So whether you're in the UK thinking about what to do next, how to plan your finances in advance of Aliyah, whether it's imminent or it's still a few years away, or whether you're in Israel and you recognize that, yeah, you know what, I've made some of these mistakes, I need to think about how to correct them. Now's the time to perhaps spend some time thinking and exploring what the solutions might be and how you can best achieve them. And to that end, I'm going to be available in the coming weeks to meet with people, whether you're in the UK or you're in Israel, over Zoom like we've done today, or WebEx and Microsoft Teams, over the phone, FaceTime, or in person if you're in Israel and you prefer to meet face-to-face, to review the plans that you've got in place at the moment, look at the objectives that you have, and consider how you can best meet those requirements. What we'll do now is we'll take a few questions. The first one that we've received is about the recent change in the UK-Israel double tax treaty, which sounds particularly boring, about how it affects and impacts on UK pensions. So as many of you will know, under UK pension law, you can't draw benefits until you're 55 years old if you have a personal pension or a money purchase company scheme or a SIP. At 55, you can take a quarter of the fund as a tax-free cash sum, and the remaining fund you can take as income. When you die, the fund remains invested, is not subject to IHT, but your beneficiaries can draw benefits, draw income, and they will be subject to income tax on whatever they draw. Under the double tax treaty, it's now possible to potentially pay 100% of your pension out of the UK into Israel to be reinvested in Israel outside of all the UK pension laws, subject to the remaining years of your 10-year exemption on investment returns. Because the change in the double tax treaty means that if you are resident and tax resident in Israel, then Israel has the first right of refusal to tax you on pension income, and Britain effectively waives its right. And this change in the double tax treaty, which came into effect on the 6th of April this year, merely or mostly brings the British-Israel treaty into line with most of the treaties that Britain has, with its major trading partners. So it's not some kind of special loophole or concession for us here in Israel, but it does represent a tremendous opportunity for people with pension plans in the UK, whether they're about to make Aliyah or they've already made Aliyah, to perhaps think about restructuring. If you're away from taking benefits, there are ways that you can restructure your pension whilst it remains in the UK, for instance, if you're under 55, but deal with some of the problems that we highlighted this morning, like having a portfolio mostly invested in dollars. Again, to bring funds out of the UK pension into Israel is something that requires a good accountant. If anyone doesn't know Mark Struel, you can just Google the name Struel, tax accountant in Israel. I know Mark will be delighted to help anyone. If you've got any other questions, I've had a couple of, let me have a look. Okay. If you've got specific tax questions, I'm not a licensed tax advisor, and I certainly don't want to profess that I am. So tax questions need to be answered by a tax accountant. And as I said, Mark Struel, who's on the call today, you can probably use private webinar. If you go into the question section, and you can privately message Mark if you'd like to. Another important aspect someone asked is about opening bank accounts. So bank accounts in Israel, there's several key differences for those familiar with banking facilities in the UK. The first is if you have investments in the UK with a UK investment manager, M&G, Perpetual Fidelity, whoever, you open your account directly with them. And you don't see the custodian that stands behind that investment manager and physically holds the assets on your behalf. In Israel, it works slightly differently, where you have a separation between the custodian of the assets, who you as an investor have a direct relationship with, and the asset manager who only has power of attorney to manage the portfolio for you. Now, this has some really big advantages. The first is that the kinds of frauds that unfortunately some clients have seen in recent years in the UK, they just can't happen in Israel because your financial advisor, your asset manager, he can't take hold of your money and go and spend it on school fees, gambling or holidays, as one well-known Jewish IFA did very sadly a few years ago. So there's additional security for the client. And it does mean also that you've got much more transparency. If you're in Israel, you just need to open an additional custody account in your bank. Non-Israeli assets are still subject to the benefits of the 10-year exemption. If you're in the UK and you want to open an account, it's still potentially possible to do so. And just to plug someone else who's on this call, who's listening to the webinar, is Johnny Gross at Mizrahi Bank. Again, you can privately message Johnny if you've got questions on that particular point, because we're obviously not a bank, so we don't provide bank accounts. We just do work with all the major Israeli banks on portfolio management.
The question here is, if the funds are brought to Israel, would we not make them subject to Israeli tax? If only, they're only subject to Israeli tax if they're in shekels, not if they're physically here. You can keep your assets at your local bank in Israel in foreign currency and keep them still out of the Israeli tax net. It's where they're physically custodied is not the issue for a tax point of view. It's what currency they're in, and obviously that we touched on earlier. If what part of your portfolio should be in shekels and what part of your portfolio should be in foreign currency shouldn't be driven by the tax issue. It should be driven by the holistic planning and taking a holistic view of the wealth and the personal circumstances. There are many. Ask anyone who made Aliyah 10 years ago if they can go back in time and choose tax-free, denominated in sterling, or transfer their money to shekel and pay the income tax. And I promise you, everybody would happily pay the income tax and not be exposed to the currency risk.
Okay, thanks, Mike. We've had a couple of questions about UK tax residency, domicile, and inheritance tax. I'll just give you a very, very quick overview of those. So the first, of course, is that making Aliyah becoming an Israeli citizen and getting the benefits of living in Israel is a completely separate question from tax status in the UK, tax residency and domicile. So they're two entirely separate issues. You can make Aliyah and still be UK tax resident or UK tax domicile. UK tax resident is really primarily based on the centre of life and how many days you're in the UK for, and therefore whether the UK can tax your income. That's one issue to be very aware of. The separate issue is one of domicile, which is a sort of almost uniquely British legal concept. And domicile is relevant only for Olim in terms of inheritance tax. If you are UK domicile, you're subject to inheritance tax on your worldwide assets. If you're non-domicile, you are subject to UK inheritance tax only on your British assets, if you have any left. And the way to establish or change your domicile is not an exact issue, but it primarily involves permanently leaving the UK and acquiring as your permanent home a place in Israel where you will be living for the rest of your life, where you sever most of your ties to the UK and you establish quite clearly that indefinitely, the centre of your life is going to be in Israel. If you do that, and again, you need advice from an accountant to make sure you're doing it properly, then you will, after a few years, no longer be subject to UK inheritance tax on non-UK assets. If you then happen to live in Israel and ultimately pass away living in Israel as a UK non-domicile, that doesn't preclude any children or grandchildren in the UK receiving an inheritance that may not be subject to IHT. But these are careful planning steps to minimize tax, and it's very important to get that right.
Okay, we've got another question on the Israeli 10-year scheme. Is it does it apply to overseas assets or also Israeli assets? The 10-year exemption only applies to foreign assets. It won't apply to shekel denominated or local company investments or local property investments. It won't apply. It's only to foreign.
But if you're holding non-Israeli investments with an Israeli bank in a custody account, then they are not subject to tax for the 10-year term. I think we're going to probably wrap up now. We've been through quite a few questions. where do we go from here? Well, as I said earlier, hopefully today has been really interesting for you and a bit of an eye-opener, I hope. And maybe we've put in front of you some issues that you've not thought of, some issues that you perhaps addressed and not addressed as well as you could have done. And now really is an opportunity to take things forward. If you've not yet made Aliyah and you're planning Aliyah, then let's get together over Zoom, as I said, or one other form of webinar or video call. Talk about the plans that you're thinking of making, talk about your objectives and how you can position yourself pre-Aliyah not to make the kinds of mistakes that we've outlined today. But if you're already here and you've been here, whether it's for 6 months or 15 years, and you've made some of the mistakes that we've outlined, and you want to start trying to address them, then please be in touch with me, or we'll be in touch with you. We can arrange face-to-face meeting or a consultation over Zoom. Talk about the issues that you need to address and how you can address them successfully. Because as I said a few minutes ago, ultimately, peace of mind comes from having the right financial plans in place and having an advisor qualified and licensed to help you every stage of the process, including from the day you land on the tarmac at Ben Gurion Airport, having made Aliyah, for the remainder of your life in Israel. English-speaking advisors with an understanding of English-speaking culture, where all the reports are in English, all the communications are in English, and there's someone to come and see you and talk your language when you need to speak to someone. So for all those who joined this morning, whether again in London or north of England or in Israel, thank you for joining us. Keep well and keep safe at these very challenging times, and we look forward to being in touch with you in the coming weeks.
Thank you very much.